Hello, my YouTube friends. I hope you're all doing well. Today I'm going to talk a little bit about Tesla again. I'm going to talk about some stocks that I see have gotten us some value that I think is pretty good. I'm also going to talk about the yen currency, and I'll probably blab about some other things because I've missed a few days of recording and feel like I have a lot to talk about. So forgive me if I bounce around a bit, but it should be a good video. Good morning. My name is Adam Kahn, and this is Investing with Adam K. I hope you're all doing really well. Today is Thursday, May 30th. We had some earnings this morning. We have some more coming this afternoon. CRM got crushed after their earnings are down over 20%. Tell you my take on them as we get further into the video. Foot Locker actually had a decent report, which has pushed both Nike higher as well as Foot Locker kind of boomed off the open. We'll see how it goes from there. And then I'm going to talk about some stocks a bit that I think look pretty well valued. Now, there will be nothing in the description, no links of Moo, no sales pitch of join my private groups, no do this artwork thing and make more money than you could in real estate or stocks. None of those sales pitches. I'm tired of watching, like, they're guys I like that are now doing more and more of it. One in particular that I think he did decent content, but now all I hear about when I listen to his video is sign up for Moo, get 7 of this and free that. Like, it's nonstop, over an hour discussion of self-promoting and signing up for their links in the description. I am not going to have any links in the description. I am not selling any books, although I thought of writing a book. Um, just because I like the reason I do this content, it helps my mind, not because I really am trying to sell a book. Um, but no classes, none of that stuff. I mean, I'm happy to answer questions. I've actually thought about meeting with people here in Las Vegas to just have lunch or chats or whatever. But uh, all of these extra sales pitches that everybody does, oh my God, it's getting out of control. I understand people need to make a living, but it seems like once they start making a living, they then have to sell more and more and more. It's like just a little much for me. So one of the first stocks I noticed that started to look attractive again today, Palo Alto Networks, dropped back below $300 a share. I still really like them as a company. I think when they get to these levels, they start looking attractive again, and it's something I want to own long term. It is in my set it and forget it account, so I don't watch it religiously, but I pulled it up today out of curiosity. I saw it drop back down below 300. And to me, this is not financial advice. As I always say, you guys need to make your own decisions when doing any of this. Please don't listen to me. Don't listen to any other YouTuber. You need to seek financial counseling from a financial advisor or do your own research to make those decisions and not follow what we do, simply because what fits your life and where you are is going to be different than what fits me. Now, I do think under 300, Palo Alto Network starts getting rather attractive again. I think they're in a great space that's going to continue to grow. Cybersecurity is becoming a bigger and bigger issue, and I just don't see how the best company in that space doesn't continue to thrive over into the future. Now, in terms of price action, the reason I like Tesla so much is even today, it traded up to about $180 a share, a little higher, and then it fell back off. It looked to me like it had probably made its lows when it fell below $150 a share prior to the most recent earnings. I saw that as a really good opportunity. The way that the volume picked up and it just seemed real panicky and the news was getting terrible on them seemed to be what I would look for and what I hope is a bottom. Now, of course, things can change. It can start drifting lower again and push through those levels, but that looked really attractive to me. And now that it seems to have had a bounce and it's settling in this new range that it's been in, that's kind of what I look for in price action. Now, on top of that, I really like Tesla as a company. Maybe they're overvalued today in some respects, but I think a lot of the things where they're going to generate revenue aren't even a huge part of their income currently. I think as time goes on, those charging stations are going to become really significant. And what I talked about in the other video of how they control every aspect of their industry as opposed to their competitors. They're direct to consumer. They control the parts when you have a something gets damaged or you have an accident. They even sell you the insurance. They then also have add-ons for the car, the little things like, I'm cheap as can be. I don't get anything, and I still use one of their add-ons for both of our vehicles, where you get free XM. It's not XM, but they use, I think it's called Slacker radio, and then it gives you Wi-Fi and it tracks this and it does a whole bunch of things I could care less about. But the radio is actually really nice because you can say, play X or play Y, and it'll play whatever you really want to listen to, and then a mix of similar music around it, kind of like what XM and Siri and the other stuff do, which is a nice feature in your car to be able to listen to whatever you want. And their price is really reasonable for that. But the automatic driving and everything else are monthly add-on subscriptions that people can sign up, and it's a way for them to push their revenues. And I'm sure they'll have other products available to incorporate into that system as well. And that subscription model is big because even after you've bought the car, it's new ways of driving revenues. My understanding is they're also working on having a less expensive car, even in the Model 3 and the Model Y, somewhere in the $25,000 to maybe $30,000 range, um, which might really drive those sales up tremendously. I also noticed this morning that Google, or also known as Alphabet, has drifted down below $173 a share. I think that starts to look attractive to me too. I think they're in an upward trend, and anytime you see those pullbacks, it's an opportunity to either add on or get in, if that's a stock that you're looking to add to your position or you're looking to get into. Again, not my advice. My position in most of those is pretty well established at this point, and I don't really trade them. I just keep an eye out of habit and because I like watching them. But I love Google. I love all the companies they own, and I feel like they're kind of like the blue chip of tech companies. They're really consistent. They're slow and steady, but they consistently seem to be able to drive revenues, and I think that's just going to continue for a long time. I mean, when you use their name as, I'm going to Google search it, it's kind of like Kleenex in terms of tissue paper. Those things last a very long time, and as long as that's the way people think of it, it's not like they're going to move to Bing, because when they say I'm going to search for something, they say go Google X, Y, or Z. They don't say go Bing where to find Kleenex, whatever it is. So I think that's really valuable for Google, and they continue to get into other spaces as well and continue to find products to help grow their company. And they make tons of money. I just don't see what's going to change that in the near future. Was also nice to see Nike start creeping higher. It really hasn't made any significant move, but it's just nice to see what I've been hoping in terms of what I'd look for in terms of a bottom. Foot Locker came out with their earnings this morning, which is what I think is helping to drive Nike up a bit. Not sure that that necessarily makes sense, other than they're in the same space. Um, and since Foot Locker sells shoes, they'll associate Nike to it. But I felt like Nike was oversold. Foot Locker's one I talked about in videos a long time ago. I really like the CEO there. So it's nice to see it have a pop like that, because maybe that's a sign that the bottom's finally in. I'm a little cautious with it just because it's taking so long. But Mary Dillard is the one who helped drive Ulta Beauty to grow to the company that it's turned into. And I really like Ulta Beauty at this point as well. I think they're a great company. But she took them over a 10-year span and grew them tremendously. She then wanted to be at Foot Locker, which I think is super cool because she must see something in the company where she thinks she can drive it similarly. Now, I haven't seen a whole lot change in the stores or anything else at this point. At the same time, the street really liked what they reported for their quarter today, so maybe that's a sign of things finally taking shape to what they should be and how they hope it grows. I know I mentioned Nike a few times in the past few days about being something I like just because it's been oversold. I think it's one of the best values you've gotten for Nike that I haven't seen that pricing in terms of price to earnings ratio in a very long time. And if it's a spot you want to be in, I see it as a really good opportunity anywhere $100 a share to maybe get into Nike. Now, if it's not something you're looking into, you need to decide the stocks you guys like and what fits you. I did buy some. I'm hoping it works out. I'm hoping the bottom is already set in. I guess we'll see as we move forward. So I also looked at Salesforce today because they had earnings that showed a bit of a slowdown, which is the thing that's difficult is even in retail, I'm noticing some companies having rough earnings, some having really good ones. There seems to be like a divergence, and the ones that have a rough quarter or whatever get really punished. I think that creates a good opportunity for the long term. I've talked about it in other things, bad news on good companies. If it's a good company and they have a rough quarter, that's really not indicative of anything in over the long term unless there's something in the narrative that indicates that this is going to be a problem weighing on the stock for a long, long time, and maybe a change in the system of how they make money and where they'll go over the next 3, 4, 5 years. If there's answers that are simply about it's a rough quarter and such is life and it's understandable for whatever reason, and maybe there'll be a couple additional rough quarters, well, it shouldn't be such a big deal. Now, I am not a huge fan of Salesforce, but any company that's been doing that well, that's down 20% in a day off of earnings, is going to pique my interest and I'm going to take a look. When I look at a chart, now a chart doesn't necessarily mean much of anything. If by next quarter the earnings are better and things look more optimistic, basically their earnings came in low and their guidance going forward wasn't great. And when I look at the chart, even though they're off 20%, it looked like I didn't really see support levels until they get closer to $150 a share, which is a long way down from here. Now, if Salesforce was a company I was looking to pick up, which it is not, that's why I say you guys need to do your own research. I'm just talking about what I see when I look at it. I would still be buying somewhere around 10% of what I would want to put into Salesforce, simply because if that was a stock I wanted to own and it's down 20% today, it might be an opportunity and it may never get to that $150 level that I see in the chart. But I still look at the chart, I pay attention to it, but I'll want to have something in it if I'm looking to get long it, because if I'm wrong and it doesn't get there, I want to make sure I'm invested in the companies I want to be invested in. I did that video a few days ago about the five stocks don't no matter what. Really, I wouldn't care if I paid the highs on them. I want them on my screen, and I actually want to have money in them for that exact reason. If they go lower, I almost hope for that so that I can put more and more of the percentage I want to put in. Let's pretend for a minute it's a $10,000 investment. I'm probably going to put somewhere between $1,000 and $2,000 into those companies, even if it's the high. And then I'm hoping they fall so I can eventually get that full $10,000 investment into those stocks. Most of the time, I probably only get 50 to 70% invested into what I'm trying to get invested into, but they usually go against you for some amount of time before they reverse and start going higher. The thing that I find that's interesting about stocks is similar to currencies and other markets, the trends can go for a very long time. They can go down for a long time and be out of favor. And then once they reverse and they start going higher, that can also last a very long time. I've been watching the yen futures because that was one of the things I used to trade on the floor. The yen is super inexpensive right now. I actually had bought some yen currency. It has gone against me, but I've left it where it is. If I'm wrong, I'm wrong, and it'll just weaken further. But I think it's gotten to the point where it's pretty extreme. And from what I've watched the currencies, they can go in 10, 20, and even 30-year trends. So, if and when it reverses, I'm hoping it's a slow and steady move the other way. And then the last one I'll talk about is the one that hurts me the most because in some ways I hate buying it here, but that's kind of why I think it's probably right, which is Starbucks. Along those lines of what I said, when bad news comes out, it's still a great company. I hated what the CEO had to say. I wish they had some better ideas about growing market share as opposed to saying that people don't understand their value proposition and things like that, because that all sounds like excuses. I think I have some ideas that can grow their market share and help get them back in line. I think them doing discounts on the app is probably a big mistake in some ways because the people who do see the value don't mind spending more for Starbucks because they like the brand. When I look at Starbucks, I compare it to, I don't know if you guys have seen me talk about McDonald's and when I was a kid and investing in the five different companies. But the thing that amazed me about McDonald's, if you held it over those 40 years, there was like three times that the stock fell more than 50% over those 40-year period. I could see that with Starbucks as well. And if you're looking to hold it 20 or 30 years, my guess is you'll do very well with a company like Starbucks. Now, that's just my guess. I guess we'll see. But you don't worry about the short term, even if the company falls in half, which I don't know what the all time high on Starbucks is, but it could be that it's had that big of a correction. At the same time, if I give it another 10 years, my guess is they've continued to figure it out and they've continued to expand and they continue to grow. Just my 2 cents and what I look for. Good brand, good company. Try not to worry about the ups and downs. Invest in a total portfolio, pick some great companies and hope to outperform. What I really hope to do is better than what I would do in a bank account is where my head is. Because the money has to go somewhere unless you plan to put cash in your mattress and hide it. I apologize that I haven't done the videos. It wasn't because of the vacation or anything like that. I had this terrible stomach flu that I'm still half like I feel better, but I don't feel 100% quite yet. It really knocked me out for a day, and then the next day it wasn't so wonderful. Today I'm finally feeling better. Not that you really need to know about my health and my stomach issues. But boy, it really knocked me out pretty good. So I'm finally feeling a little bit better today. Forgive me if I'm even more dry than usual in terms of having no animation, but that's all part of it. But before I forget, if you could do me a favor and subscribe if you haven't already and smash that like button. Maybe tell me some comments or what you guys have been watching. I've had some great comments about some companies that other people have seen that were out of favor, one that's had a nice big pop since the person told me because the earnings came out and they've done real well. And I thought their ideas on it were really good because it's in the pet space, which I think they're right. I think that's a good spot to be in. I just don't follow it personally so well. And the other thing is I try really hard to stick to trading the things that I pay attention to, and I suggest that for you guys too. Like that's why I say don't follow my advice always. Because if you take my advice, you're not going to trust your instincts enough. You have to follow your own gut and your own things that you guys watch. Anyway, have a great day. I'll try my best to talk tomorrow. Um, Beautiful day here in Las Vegas. Hopefully, you're having a nice day as well.